Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that.
Chicago wheat. The dominant longer-term pattern here, one which I described 14 weeks ago, when I said, and I quote, there was something that came to light by my looking at the longer-term charts for my annual review earlier in January. It is a March/October 2025 to date descending triangle pattern. End of quote. The break above the descending triangle pattern 11 weeks ago led me to name what I thought would be some very, very long-term targets. The primary target at 626 was easily reached, but left a secondary, much harder to reach target, originally which was up off the top of my daily chart, but now this week prices reached up to target X at 668 even last Wednesday, and sharply backed off as Tuesday and Wednesday and Thursday of this week made a pretty good bearish evening star pattern, possibly at the top of the recent run-up. I also, 8 weeks ago, put forward an old technical analysis technique, but one that I recalled worked well in the grains during the start of the Russo-Ukrainian war back earlier this decade. It was doubling, tripling, or even more of bull channels. In this case specifically, the late January to mid-February bull channel, which doubled up, became currently 627.5 to, 657 and 3/4. This provided some guidance as prices started higher in March, then back down again at the start of April, and most recently back up again. We are back within this doubled up bull channel between the 50% Fibonacci line of the March 24 to May 25 move at 651 and the lower bull channel line with the 50% Fibonacci of the May 24 to May 25 move just below at 622.25. Finally, I'd like to go back to a point I spoke about 9 weeks ago and ever since, and I quote, "Then there is my final point. It is again something I saw from my longer term monthly charts earlier in January. It is a May/July 23 to date bear channel, highlighted in purple on my daily chart. The lower purple bear channel line is below the bottom of my daily chart. The upper bear channel line is close today to the market. It's currently at 609 even." End of quote. Well, we tested that purple upper bear channel line since the beginning of March, piercing it, but only this week have we spent all the time above it, and can now call it broken. This brings me to something I'd seen in the oil seeds and vegetable oils yesterday in those charts, and it's whether to look at the whole January to day action as one leg of a possible bullish halfway hesitation. I think this is a valid case, right now at least, so I'll put forward the following targets topside for such a pattern. Therefore, a primary target would be up in the 652 area, a level we have already reached, with a secondary, harder to reach target X1 up in the 701 area. Now this looks good as a pattern idea as long as prices can stay above the purple upper bear channel line, the broken one. But we do have some interesting resistance in the way, notably the 50% absolute Fibonacci line at 682 even. So watch carefully. Chicago corn. A short commentary because the key pattern here continues to be, as you can easily see, the August 25 to January 26 dark blue bullish chef pitchfork. We're in between the dark blue middle time below, which is currently at 470.5, and the dark blue upper time above, currently at 490 even. Further below we have the green short medium moving average, currently at 459.75, as well as to a somewhat lesser extent the mauve medium moving average, currently 451.75. Plus the lower trend line extension, currently at 454 even, of the July 23 to January 24 descending triangle. And not forgetting the 50% Fibonacci line for the whole of the 25 move, 2025 move at 454 3/4. Meanwhile above, and somewhere above, the April 25 high at 497 3/4, the 50% Fibonacci on the June to August 24 move at 505 even, then the combination of the October 2014 low and the 50% Fibonacci line of the June 23 to February 24 move, both at 516.5, followed a little higher by the combination of 2014 high and the 61.8% absolute Fibonacci line at 525. However, whilst I can list all these supports and resistances, the most important point will be how the market maintains itself, and then how well it maintains itself within the dark blue bullish shift pitchfork, which is the showrunner for this market. Kansas City wheat. Much as we've seen in the other grain markets, the rise we saw since just before Christmas last year had formed a more than reasonable looking December 25 to February 26 original bull channel that prices broke higher from 8 weeks ago. I applied there, as I've done elsewhere, and I quote, an old technical analysis technique, but one which I recall worked well in the grains during the start of the Russo-Ukrainian war, back earlier this decade, and that is doubling, tripling, or even more of bull channels. Now, tripling this higher, currently at 641 to 673 3/4, gives another topside resistance, end of quote. Well, the tripled up upper bull channel line capped the market throughout March, as did the doubled up bull channel line in early April, when prices took a tumble in early April, not able to push up through that tripled up bull channel. However, last week, and especially this week, the market did manage to make a meaningful further move higher, up into the quadrupled up bull channel, which is currently 674 to 707, even breaching the upper bull channel line on Wednesday this week, but not managing to sustain, not yet at least, and looking like it may have formed a 3-day bearish evening star pattern this week, right on that quad up upper bull channel line, though today we have not seen much of a follow-on higher at all. I think this is due to the market testing two supreme congestions right now. The absolute 50% Fibonacci line at 697 1/4, which means this market is higher in its development than, for example, Chicago wheat, plus the big old 50% Fibonacci line of the 2011 to 2019 move at 691 1/4. That being said, much like Chicago wheat, and also something I've seen in the oilseeds and vegetable oils yesterday, it brings to mind whether the whole January to date action, in this case, I would look at the whole mid-December 2025 today action as one leg of a possible bullish halfway hesitation. I think this is a valid case here, right now at least, so I will put forward the following targets topside for such a pattern. Therefore, a primary target would be up in the 686 3/4 area, an area we've already reached, with a secondary harder to reach target X up in the 745.5 area. This looks good as a pattern idea as long as prices can stay above at least the lower bull channel line of the doubled up bull channel, and ideally above the whole tripled up bull channel itself. It will all very much depend on what the market does with that pair of significant long-term 50% Fibonacci lines overhead previously mentioned. Or where we are now, actually.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.